That's the end of today's webinar on the how to make money trading stocks and ETFs. Until next week, hey, have a wonderful weekend, and since it is Christmas weekend, Merry Christmas and Mele Kalikimaka, as we say here in the islands. So good day, God bless everybody. Hey, good day, trend traders. It has been another successful week, successful month, and successful years for the active trend trading system that we got started about 10 years ago. And I'm Dennis Wilborn. I want to say hi. I want to call your attention just real quickly. At the end of the webinar recording you're watching right now, you will see a couple of offers. One is to our premium exclusive training on Strategy 3, which is basically like doing cover calls with a turbocharger. It basically is selling weekly premium to generate both wealth and income. That is an offering I'm doing, but you have to act on it before 12 noon Pacific time tomorrow, which tomorrow happens to be December 23rd. The other offer is just, through the end of this month, I'm offering a 40% discount on active trend trading premium membership and on our early warning alerts services. So again, I don't like to hype a lot of stuff, but I'm just throwing it out there. If you want to basically take advantage of our best system and strategy number 3, you need to act by tomorrow. You get some really big bonuses. So watch the video on the website that just describes what it's about. It'll tell how much it is, how much it costs, and the whole 9 yards. So without any other ado, on with the regular webinar.
Good afternoon, everyone. Welcome to the Making Money Trading Stocks and ETFs. This is Dennis Wilborn with the Active Trend Traders. Joining us from Zurich, Switzerland is Michael Bishop. Welcome, Michael.
Hello, welcome.
You have been away for a while, so I hope that you've been either having good holidays or going skiing or something.
Well, there was some private stuff to do, or some, and then yeah. So
okay, and
I'm doing fine and always happy to join you guys. But,
excellent.
I definitely can't make it every week.
I understand. So I want to remind everybody that all the materials that we do have are for trading purposes only. Traders should always pay for trade any new method prior to the risk of their own personal capital. And always remember that past performance is not necessarily a guarantee of future performance. What we try to do is just follow the active trend trading rules, and over time, let the rules take care of us. It's a little bit about where I've been, what I'm doing. I tell you, at the end, at the end of this year, 2017, I've only been retired from the Navy for 20 years. Just absolutely amazing. In the last 10 years, I've been doing the active trend trading, and just have absolutely loved that completely. Remember, every trade is a conflict between emotions, knowledge, and wisdom. What we try to do with active trend trading is help people grow their knowledge and apply their wisdom so they can at least counteract their emotions. Because I don't know if we'll ever get rid of our emotions in trading, but we can certainly do what we can to counteract those. The objective of this webinar is to provide timely, actionable intel at the end of every week. We'll do a real quick market review, stocks and ETF performance, and then any bonus trades that we see setting up. We just closed one of the bonus trades this week. We'll highlight, and that was Nugget. And some people have held on to the Nugget and have actually are pushing 16, 17, 20% gain in about a week's period of time, or a little bit over a week period of time. So my congrats to them. I followed both ways. It's perfectly good with the rules. I got out at a targeted percentage, and that's fine too. I just want a real quick announcement. New active trend trading members starting in 2018. One is my son here, Brandon. He's going to be coming on to manage the website and do marketing and help me with research. He and his family are moving to Boise, Idaho. which we're really glad. This is my little grandson David with his cowboy hat. He's watching his sister do writing lessons. And then of course my wife is going to be joining us. Michelle Wilborn is going to join as the and basically work in member services, and that way she will. That way she can basically help any people with their questions about the site, and my main thing is just to help people get started when they first sign up and become a member. So she's going to be the troubleshooter. She's a great businesswoman, and I finally convinced her into joining the team. Did I not put that there? I probably didn't. Well, darn. As of 9 a.m. this morning, I will flash this. Fortunately, I am prepared for all such situations. There we go. We'll just pop over here and just say, here's where the index is as of this morning. So basically, we're up 46% for the year so far with active trend trading. All the markets are up. Look at it, NASDAQ and NASDAQ Composite up almost 30+% for the year. Truly phenomenal, given that this is a post-election year. It's kind of interesting. I was making a comment on Wednesday night about how I really don't like listening to the news, Michael, because the news tends to be always slanted, if you will, in so many ways. And this is one of the things that, look at, this is almost kind of unheard of in a post-election year for the market to be up this much, but it's almost as if the government regulations coming off the backs and necks of businesses and off the necks and backs of people have basically caused the economy in the U.S. to just perk up. 3% GDP growth in the past 2 quarters, looking like maybe in the 3s to the high 3s for the next one, which is really phenomenal. So, what have the folks in Europe been thinking about what's going on with the economy here in the U.S., Michael?
Well, I mean, it's really a phenomenon. I mean, I think I will in 5 minutes tell you again, but I think a majority of European countries had an even better performance. And if you look at China, it was also better. And especially, dollar lost about 10 to 15% to the other main currencies.
Right.
So taking all this into consideration, I think really it was a classical year where you could basically buy in every country in every market and have a similar performance.
Okay, so what you're telling me then, Michael, if I understand correctly, is that it didn't take a brilliant analyst to be able to do well in this year's market. Is that what you're saying?
Yeah, sure. I mean,
okay.
I just have it here. So AFA, that's the Western markets in dollar noted but not hedged in dollars.
Okay.
So that's,
and we'll take a look. Yeah. Do you have a couple more of those? And we'll take a look at.
Fair.
We'll take. What's the other one?
Just wait a second.
Okay.
So well, that's 25%. So it's very comparable, yeah.
Okay.
And China did even better than I know.
Yeah. What do you have for China? Because I don't even really track China that much anymore, because I'm really content with the specific stocks and ETFs that we are tracking, because they move plenty. So I'm not a Bitcoin chaser, although it is kind of interesting to watch what's happening with the Bitcoin bubble. Seems to be leaking air very quickly. So I'm going to run over here to the get started with the charts while you're pulling those up. S&P, guys, basically S&P is looking kind of weak. We had pushed up. We have negative divergence going up on the S&P on the daily chart. However, on the daily chart, we've got this negative divergence going on here. However, on the weekly chart, it's continuing to push to new highs. At the same time, while it's pushing to new highs, it is, we could say that it is definitely, and why is this, my bandwidth is messing with me. Of course. What is happening here is, there we go. Let's see if we can get this. In the past, going back all the way to 2014, 2009, 2011, so just about covering from 2009 on. This is the first time on the indexes, on the S&P, that the true strength index, the momentum, if you will, has pushed up to such high levels. Normally, it would hit about this plus 65 level and roll over on a weekly chart. And so we know without a doubt that, guess what? We are extended, as you can see here, and we're a long way from the mean. So a reversion to the means at the beginning of the year would not be a surprise to me whatsoever, Michael. And let me go through the NASDAQ, and then I'll jump over to the EFA and anything else you wanted me to take a look at, Michael. Okay, here is the NASDAQ. Again, similar type situation, pushed to new highs. However, on the weekly, we're getting some negative divergence here. I'm not going to say that we're going to have a huge sell-off, but I would anticipate at least pulling back towards the mean. And until proven differently, pulling back to the means to us is buy the dip. And you continue to buy the dip until the dip stops working. Russell. Okay. Russell on a daily chart, looking kind of interesting. I won't really, kind of negative divergence going on here, but we are above the moving averages, and so any pullback into the 820 combo or even a takeoff from here, we can move. We have had a breakout. We can now go ahead and move this trend line up a little bit and let that be the top of it now. And if it breaks through that, it'll have one more level of at the 1560 level. That would be your next level of resistance. So you may have a little bit of play in between that and the 1560 level, as we can see here on a weekly chart. Let me get this. Come on. As we can see on a weekly chart, pushing on up, a little bit of negative divergence, but it looks like it wants to turn up a little bit. One of the interesting things, Michael, that people have been talking about here in the U.S. is that now with that the tax break appears to be going into place, which will be a benefit to small businesses, that the tax break may benefit the small cap indexes like the NYSE and the Russell, push them higher because they've been kind of the lagger for the year, and provide a really good 2018 for them. We'll be watching for that to see if that in fact transposes, because they have some makeup to do, and so the tax break kind of offset the recent interest rate hike that tend to hold the indexes down. So what do you think? I mean, it sounds reasonable to me, Michael.
Yeah, definitely.
Yeah. Okay, here's EFA. We'll look at this both from here's 2000. Man, it's almost gone straight up since the beginning of 2017. Now, EFA is that is not Netflix.
That's basically all Western countries except the US.
Okay, so this is kind of the Western European.
Yeah, including Japan and Australia.
Okay, so yeah, so this has been a nice move up.
But there are tons of charts like this. If you take EWG, that's Germany, you couldn't find the difference.
EWG.
This
This is one of the,
stop.
It will.
Okay.
Correction. EW. Well, Dennis Wilborn. There we go. EWG. Yep, very similar. Again, at the beginning of the year, it took off.
Japan, and they have a new not all-time high. They had a huge run in the 80s.
So,
I think.
Do you have something on China? EWJ.
Yeah.
There's Japan. Okay.
And China is FXI. That's Hong Kong. So basically, the Chinese shares as Westerner that you can trade.
Again, here's 2017, the beginning. A weekly chart is what I'm looking at, and it's given some really nice pullbacks to move up since the beginning of the year. If we go here, grab it there, it had a nice little run of about 37% to its high. So looks like all the world markets were really doing well this year. Very interesting. So let's get over here and take a look at what else we have to do, because we try to keep this session fairly brief and short. Okay, one of the things I want to talk about just really briefly is I want to just really highlight some seasonality. We are in this time of the year here in the December standpoint. This is for the NASDAQ. Typically we're going into the last week in December, and the market tends to push up going in, after the holidays. There's an upward bias to it. What I wanted, before you go jumping along the market going into the end of the year, pay attention to what's happening over here. What tends to happen at the beginning of the year, and just pay attention to in the beginning of the year for the NASDAQ, the tech stocks. It tends to be kind of a little bit of flat to sideways, and then push up starting in March, moving on into the September pullback, and then on up. Now I recognize that this is a composite for over 20 years, and measured on percentages, the stock. The individual NASDAQ chart is probably not going to look like this exactly, but what this does is give us a good idea when we hit these lows, approximations of when it's a good time to be looking to buy the NASDAQ. Same thing with the Russell. Russell, we're over here, tends to get a good little bid going into the end of the year. We could still see some nice upside next week in Russell, but look what happens at the beginning of the year. A little bit of down to sideways to up a little bit, but then ticks off and takes off in March and in through the end of July. This has been validated and verified by what? By the IBD 50 research that I've done over the last, covering back to 2004, covering what happens to the first IBD list of the year, and it validates that somewhere between January, February, you'll tend to hit a little bit of a high, then it'll do a pullback, hit a new low or maybe the low for the year in the March, April, May timeframe, and then rally from there. And so that's been validated. I started watching that seasonality. That's what got me turned on to seasonality, to say this is working pretty good. So just pay attention to that.
Dennis, do you have a tool where you can feed international markets there? Because I have seen the chart, but I have not used the tool. Somebody told me that the Asian markets tend to have a huge positive momentum in January and February, because they don't, the arguing was kind of, they don't have a big celebration for Christmas nor New Year. And I think, when is Chinese New Year? I think it's much later.
Yeah.
Maybe March, or I think so that's their peak. And so you have a very good strategy would be October to end of year American stocks,
right,
then shift it over to Asian stocks.
Yeah, I'll have to take a look at that, Michael, and find. Basically, I just did a search on seasonality, but it would be just a search for the Asian market or whatever. You had EFJ.
Yeah, or yeah, or FXI. I would try with
just take and I basically just, when I first started looking for this, I just started Googling seasonality in the stock markets, and charts started popping up, and I never met a chart I didn't love, and so that's what got me started in it. I will make that part of my year-end deal, is to take a look at that. So here's where we're sitting with the active trend trading service. I have been focusing primarily on strategy 1, strategy 2 over the last week and a half, almost most of December, basically trying to build those up. Our strategy 3 has done very well for the year. The active trend trading is basically, we follow our motto. We try to clarify, simplify, so that our members can multiply. We have to, I want to work and I'm dedicated to making trading manageable, no matter how busy your lifestyle is. So if you're still working for a living, we want to provide a mechanism by which you can still be active in the stock market without having to drive yourself, spend all the time away from your family, because I want you to be spending time with your family. Here's what we did last week. Okay, what am I looking at for the last week? Okay, 1, dressing it up for the end of the year. Institutions will be putting on their window dressings to basically be filled in the stocks that were the big movers, so they can at the end of the year say, yes, we were invested in Tesla, Netflix, NVDA, Facebook, you name it, the big ones. I anticipate low volume, high volatility. That tends to be very much the part and parcel for the last week in the year. Remember, Monday is Christmas, and so next week we'll only have 4 trading days left, or in the week, and also that's 4 trading days left for 2017. How will I use my time? I will be basically looking for just real quick swing trades. That'll be closed prior to the end of the year, and maybe a couple of weekly spreads that I will do. Because what I'll be doing is I'll be rebalancing my capital at the end of the year, going into 2018 with a straight $100,000 to be in the trading capital. So here's what I'm looking for. Here's what we did this week. Okay, the nugget trade. I jumped out of two positions, sold at T1, T2. Net gain 781, average return 7.5%. We got into that trade, I want to say on 12/13. I'm waiting for setups in Netflix, NVDA, Tesla, YY, and Nugget. Again, these are strong stocks to be looking at. We did a YY spread on, so I got some really great emails from folks saying, thank you so much for that spread. I think David got in the morning of on Monday and was out by the afternoon of same day for his profit. Then on December 30th, I'm going to be holding training at 9 a.m. in the morning for the for one of our most successful strategies. It's strategy number 3. It's had multiple 100% winners for the year, and going back into 2016 the same. And so I will be holding bonus. And so for premium members, if you have not gotten, or you may have missed the email that sent out to invite you to join in this training, it'll be 4 hours worth of training on how to set this up, how to manage it, how to look for the trades going forward. Please send me an email and say, hey, I didn't get my invitation yet. I want to get signed up for this. It will be recorded. For non-premium members, okay, I am sending out a special invite to you, and I'll cover it in just a second to talk about that. 1, I'm looking at a couple of catfish specials. MCHP, maybe, and AEIS for sure. Some of the other things we're looking at, new composite watch list. I covered that on Wednesday night active trend trading premium training. Showed exactly what is going on with that. Strategy 2, we're refining our income trade targets. I'm looking to pick up somewhere between $500 and $1,000 per week. This past week we picked up $310. Bonus trades. I'll just highlight this really quickly. This bonus trade on Nugget, I'm sharing 10 to 12 per year bonus trades with both active trend trading premium members and the non-premium members. In other words, folks that are just reading the newsletter. And that's great because I want to share. This is what we've done. 3 trades this year, going back to October when we introduced this this benefit of being an active trend trader, and we're nicely up for the year on this strategy. And this is primarily looking at we're utilizing the active trend trader rules to get in and out in this. The other thing that we've implemented this year that the premium members are really liking is the go no go table, which we highlight what's setting up for the week, and I do this every weekend, and then a brief description of where the individual entity becomes interesting. The top 7 are the index ETF, are the ETFs that we're looking at trading. We do trade the leverage portion, part of these ETFs. Then the core stocks we're looking at: Tesla, NVIDIA, Netflix, YY, and then beats on the list for looking into the next year, and also STMP as a possible catfish special. I'm very interested in BEAT and STMP going into the beginning of 2018 when we'll reset up our service. And let's see if we're going to move along. There we go. And here's the Wealth and Income Building exclusive training, so December 30th, 2018. If you're not a premium member, okay, you can jump on this training. It's 4 hours worth of training. You get the video of the complete training. You can keep it forever. The cost for the online training is $199. And this is exclusive limited invitation for just the free active trend trading members. And you get a bonus if you register prior to Saturday at 12 o'clock. And the bonus is you basically pick up, because on 12:01 Pacific on Saturday, I will basically throw this open to the general public in Twitter, YouTube, and Facebook. And the big bonus is drastically reduced. What is the bonus? Well, if you sign up at the $199 level for $199, you get 6 months worth of the actual premium active trend trading, where you get all the alerts, all the text alerts, email alerts, and everything to try out the service. At the same time, hopefully make some good cash flow with us in strategy 3. So you can either register here or just click the link just below this video, and actually you can just basically go to the website and go to On the Radar. So remember, it is a limited time offer. And through the end of the year, of course, we will be offering our active trend trading membership for 30%, 40% off the 40% off, and you can basically hit that at this place and the active trend trading early morning alerts. So that's all I have for today, guys. I want to remind you, at the top of the hour, we get started with the next final hour. And as we say here in Hawaii, until next Tuesday, because Monday is Christmas, aloha, trade wisely and profitably, and as we say here, mele kaliki maka. I would sing it for you, but you would much prefer that I don't. And so, okay. That covers the session. I'll take a look at a couple of charts. David, yeah, that will be, it may have said 3. No, it's, yeah, 12 p.m. is your time there on the East Coast. It starts at 9 o'clock in the morning on the West Coast, goes until 1 o'clock, so that would be 4 o'clock your time there. And I'll answer all the questions and all that kind of stuff on that specific information. Yeah, my Tracy, my son and daughter-in-law, they have just fallen in love with the Boise area, and they want to move from California to Boise. And knowing what goes on in California, I don't blame them. So, Michael, thanks for joining us today. Like I said, I'm going to look at a couple of stocks, and then call it a day because I'm running just a little bit over time. There we go. So let's take a real look at LABU. I'm waiting for this to kind of come back. It got a kind of a bid today really nicely. Intraday chart, this set up very nice on an intraday chart. Not so great of a setup on a daily chart, but it's still moving on up. It's challenging this downtrend line. It's doing this big kind of cup kind of thing here on a weekly chart. And so we've got support down here at about 64 with resistance up about 79 to 80. And if we, remain broken out above that, I will look for a pullback because we now have everything above all the moving average. To get into a LABU trade, I'd be looking for a pullback into the moving average cluster. That's one. UCO. UCO is the oil. Oil's looking like, it's done a real nice little base across here between 20 and 2250. If it runs up higher than this, we're probably going to go up in a bigger rally. And it wouldn't surprise me, especially if the economics of both the United States and the world continue to improve. Guess what's going to be under demand? More oil to drive the engine of prosperity. And so some of my environmental friends just absolutely cringe when I say that. Oh, well. Anyway, up here at $24, and then it could go higher than that. And as you can see, it had fallen from the sky here, UCO, or back in 2015. Then it's been consolidating, basing, and we'll see if we get, pull back into the moving averages and a bust higher. And so it would not be unreasonable if we get a bid or the economy continues just to start booming and really generating, where we could run from the 25 to the 50 level fairly quickly. Okay, the last one, or last two I'm going to talk about real quick is NVDA. It was getting a big sell-off today, fell down below this support level at the 50-day moving average. Has moved its way all the way back up above the support level at the 50-day moving average, put in a nice little hammer, although this is not a downtrend, so I wouldn't designate this a reversal type hammer. I would call it definitely a reversal move off of support, and the buy, it shows definitely where the buyers came in. As long as we close above the 8 and start moving up here higher, we can now kind of draw it had this downtrend line there. But NVDA looks positive. Netflix, pay attention to Netflix going into next week. I like Netflix anywhere off the moving average combo, the 820, the 50, this combo in here for potential move higher, because it sounds like Netflix may be solving its issues, and it just came out with a statement today saying it's going to make more movies in this year than the Hollywood studios combined. And I don't know if you're a Netflix, if I don't know if you watch Netflix or not, but some of their content on the television shows that they put out is pretty darn good. It's pretty darn compelling and very interesting to watch. And so that's some opportunities there. So that's where I'm going to leave it for today, my friends. Again, I'll see some of you at the top of the hour. Michael, thank you very much. Merry Christmas, my friend.
Well, thank you for having me.
And you're more than welcome. You're always welcome. And as we say again, I will just flash it up one more time. Mele kalikimaka. Hang loose, everybody. God bless. Aloha.